Earnings season takes center stage as President Trump's tariffs loom. In just 3 months, US stocks have swung from a dramatic April sell-off to new heights. Now, traders are about to see if corporate America's earnings justify the optimism priced into markets as businesses navigate President Trump's trade policies. Aoifinn Devitt is Senior Investment Advisor at Moneta. So, Aoifinn, Wall Street is bracing for the weakest earnings season since mid-2023. Should expectations be so low?
I don't think they should be so low. I think we know this game by now. It is to telegraph expectations, to forecast the worst, and then surprise on the upside. And beating expectations is, of course, what the investors want to see. And that's the pattern we've generally seen over recent quarters. So we've no reason in particular to think why earnings will be weak. If anything, we've seen consumer demand surprise on the upside. Yes, there will have been confusion around quarter one, quarter two, pulling things forward into Q1. There may be a bit of weakness in Q2, but what will be important will be the outlook. I think with the outlook and the resilient economy, I expect the outlook to be a little bit more robust than we would have said earlier in the year.
Well, let's talk tariffs as well. They're expected to disrupt supply chains and raise costs. Will the impact start to show in this quarter?
Well, it's not showing yet, but I don't think that means there won't be an impact. We've seen no impact on prices, although we know that inflation is stubbornly high in the US as well as around the world, particularly the UK. So the interesting thing, though, is that we haven't yet really seen the tariffs being reflected in the prices, the eating of the tariffs that companies were encouraged to do. It seems they've been doing a bit of this because the uncertainty probably prevents them from doing anything more permanent.
Meanwhile, economic uncertainty hasn't stopped tech giants from big spending, especially on AI. So will this continue to be a dominant theme?
I do think it's going to be the theme. We're in this AI arms race, we know, around spending and hiring away the top talent. There doesn't seem to be any upward bound on where these salaries are coming in. We know that they are cash-rich tech giants. They've been spending on CapEx for some time and really bucking the trend of other companies who have had to tighten their belts. So I do see that completely on its own independent trajectory, independent of tariffs, independent of demand. First mover advantage is something that no company wants to lose at this stage.
ASML said this week it may not achieve 2026 growth. Will we see similar caution from other companies or even pulling their guidance?
I think we could see some caution, but only around this kind of lumpiness we've seen Q1, Q2. I don't know that we're going to have necessarily a step down in demand. I think, if anything, we know that the demand for energy, for data centers, for AI, for the picks and shovels of AI, the chips themselves, as well as just to embrace more and more complex models, that doesn't seem to be receding. So I don't see a step change in those demand forecasts.
So finally, Aoifinn, Morgan Stanley's earnings this week, they saw buy the dip mentality from retail investors over the entire course of the quarter. Do you think this will continue?
Yes, we've been calling a lot on the money market fund numbers that just seem to be getting higher and higher, looking at the 7 trillion mark. We know that wall of money is on the sidelines. The interesting part is, whereas there may be a buy the dip, we're not seeing a selling out. We're not seeing any kind of trying to market time on the exit side. So I'd say there's probably pent up demand for growth assets. That's where the buying the dip comes in. We know it's impossible to exactly call the dip. But the interesting part is investors that are already in the market are not getting out. They're not going to cash. They're not in some way retreating. They're basically staying the course. I think they have learned a lesson here from the type of volatility that markets are displaying.
Aoifinn Devitt from Moneta. Don't forget, you can watch more videos on Reuters.com.